The Reserve Bank ups its inflation forecast and interest rates are set to stay on hold for the foreseeable future. ANZ joins the buyback club, and Donald Trump threatened with jail at his hush money trial. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Wednesday, the 8th of May, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, you've got a great interview coming up after the show today. You're speaking with Westpac's chief economist, Lucy Ellis.
Yes, so Lucy was an assistant governor at the Reserve Bank until late last year. She was responsible for the economic forecasting from the central bank. So a great person to talk to about interest rates and what happened yesterday. And we also talked to her about how the Reserve Bank runs and the changes that have been made, whether she misses it. It's a really interesting, I suppose, insight into what happens at the Reserve Bank. We also do discuss the fact that when I started as a graduate at the Reserve Bank, Lucy and I sat next to each other. She was a graduate at the same time. She went on to become a very, very successful economist. I end up with you, Michael, on Fear and Greed.
I just had a feeling that was coming just then, Sean. I was like, but look, you know what? It really is a great interview, and like her comments on the economy are fascinating. But it is really, really interesting to hear her insight into the Reserve Bank and the way that the Reserve Bank has changed because of all the changes that were made over the last, say, 6 months or so. It is a really interesting perspective. It's a great chat. It's coming up after the show, and of course, today is Wednesday, so a quick mention of the fact that our weekly newsletter comes out a little later this morning. It's about mid-morning that it comes out. Head to fearandgreed.com.au if you haven't already and sign up. Pop your email address in and you will receive the newsletter once you've finished writing it, Sean.
That's right. We need to get the show over and done with so that I can go and write the newsletter.
Yeah, that's right. Anyway, the main story this morning, the Reserve Bank Board yesterday left the benchmark cash rate at 4.35%, and it also sharply revised upwards its inflation forecast, warning that the pace of price growth isn't falling as fast as hoped.
The board expects that it will be some time before inflation is sustainably in the target range, and it wants to remain vigilant to upside risks. That means the bank isn't ruling anything in or out. For most of us folk with a mortgage, it means we'll keep paying those 12-year higher interest rates for the foreseeable future, and economists reckon it will be at least the rest of this year. One thing to take away from it was that the Central Bank Board's statement wasn't quite as hawkish or aggressive, I suppose, or downbeat on getting inflation under control as some had expected. It kept to its neutral tone, at least in the statement, though in the press conference afterwards, Governor Michelle Bullock was perhaps a little more aggressive on the need to get control of inflation, i.e. a little more hawkish on inflation.
So speaking of inflation, what is the central bank saying about inflation?
Well, it thinks the consumer price index to the end of June will come in at 3.8%, whereas previously it thought it would be closer to 3.3%. The uncertainty is sticky services inflation. Your favourite word there, sticky. Sticky services inflation, things like rent and insurance, education, stuff that's just much harder to not pay for. While that stays high, the Reserve Bank won't want to cut rates. It provided a bunch of other economic forecasts yesterday, downgraded growth ever so slightly, improved the unemployment forecast just a touch, but really it is all about inflation. The Reserve Bank wants to be confident that inflation is moving sustainably towards its target range. After yesterday, things like next week's budget, the upcoming Fair Work Commission decision on wages, they all become even more interesting to see if they're likely to be expansionary and cause inflationary pressures. So let's bring all this back to interest rates. Even some of the economists who thought there should be a rate cut in coming months are now admitting that there is a chance of a rate hike. Certainly the timing of any rate cut has been pushed out. Governor Bullock must be getting very tired of saying nothing is ruled in or out. Yesterday she said she felt the economy is on the right path, but conceded she's frustrated that inflation is taking so long to fall. She added that she didn't think she had given any impression that there'll be an interest rate cut by the end of this year. The consensus among economists is for the next move in rate cuts to be down still, but in terms of timing, the earliest would be late this year, probably more likely the first few months of 2025.
It would be so hard, wouldn't it? Trying to speak and being so careful with your language and still trying to communicate clearly and make sure that these points are getting across, but not trying to give any indication one way or the other, because you know that everyone in the room at the press conference will hold on to that and come back in 6 months or 12 months' time and really just kind of hold it up and say, this is what you said.
I think I'm right in saying earlier this week, Philip Lowe, who was the predecessor to Michelle Bullock, actually made a comment that he likes the fact that he can say what he wants to say without being fearful of every word. And I reckon that'd be the worst thing about being governor of the Reserve Bank. No matter what you said, people would be reading 4 sentences into every word just about.
Oh, yeah, absolutely. And when you finish in the job, it would have to be the most liberating feeling.
What a relief.
Indeed. Local markets, how do they react?
Oh, it was a great day. The S&P ASX 200 finished up nearly 1.5% with a sharp rally after the Reserve Bank left the official cash rate on hold. By the close, all 11 sectors recorded gains and the bourse finished at 7,793 points. About 85% of stocks ended higher yesterday. Basically, equity traders thought the central bank would be more hawkish on rates. When that didn't happen, equities jumped. Among the large caps, the banks did very well, with Westpac up nearly 3%, while Commonwealth Bank was 2% higher. National Australia Bank went ex-dividend yesterday, so it finished 1.5% lower. The big miners did well. Wesfarmers and Macquarie Group finished up more than 2%. Transurban, CSL, Woodside, WiseTech Global, Telstra, I could go on. They all closed up sharply higher. There were a couple of significant, an upgrade and a downgrade in the market yesterday. AGL upgraded its earnings guidance for the financial year due to higher consumer demand and improved generation. Its share price jumped 7%. On the other side of the ledger, Sims, its share price fell 6% after the company issued a major profit warning.
And what's happening in international markets?
Oil prices have come off a bit. Gold's trading at $23.20 an ounce, and the Aussie dollar is buying just under 66 US cents, weighed down a little bit by those Reserve Bank comments. Local bond yields, which reflect interest rate expectations, also fell yesterday after the Reserve Bank announcement.
There is a lot going on. It is a big news day, big news week. Really. It's a big news month. Actually, I'm upgrading this. It is a big news month. When you think about when we've got the budget as well next week and the Reserve Bank board yesterday, it's a big news month.
It's huge. All the banks reporting, lots going on.
Oh, it's very exciting. We'll be back in a moment with the rest of the day's business news. Sean, ANZ yesterday joined NAB and Westpac in announcing a share buyback scheme, this time worth $2 billion. It came after the Melbourne-based bank reported a 7% slide in net profit to $3.55 billion for the 6 months to March.
Like the other two banks before it, ANZ felt the pressure of competition in the retail banking business, which includes mortgages. That hurt that bottom line. The result was in line with analyst expectations, and the group said it will pay a slightly higher dividend of 83 cents per share, partially franked, not fully franked. CEO Shane Elliott said the economy and individuals are being resilient and prudent with their money. The bank's all-important net interest margin, the difference between what it receives on loans and pays out on deposits, shrank slightly. Mr. Elliott said competition in the housing market remains hot. The bank also slightly upped its provision for bad debts. Now, ANZ's share price closed flat, or is up just a touch. That was helped by the Reserve Bank decision. Prior to that announcement, it was actually lower, so analysts weren't that much in favour of the result yesterday. It does mean that the three banks have now announced a total of $4.5 billion in share buybacks. It puts more money into shareholders' hands. That's good, obviously, but it also suggests the banks can't really think of better places to invest the money, which can sometimes raise questions about longer-term returns.
I feel like I'm really becoming a bit of an expert now on share buybacks,
Yeah,
Sean, considering this time last week, I asked you kind of what does a share buyback mean and what does it do? And every day since then, it's just been share buybacks here and share buybacks there. Bit of an expert.
Well, in the newsletter today, I talk about why I don't like share buybacks.
Oh, Aylmer Unleashed. It's coming. Head to fearandgreed.com.au and sign up so that you can hear Sean's true thoughts on share buybacks. It'll be a ripper.
The crowds will be coming now, won't they?
You never know. You never know. Someone might go, I do want to read that. Off to fearandgreed.com.au. Now, Macquarie's chief executive, Shamara Wickramaniyaka, expects investments in data centres will drive big returns for the asset manager as the world's big tech companies consume more information to feed artificial intelligence applications.
Data centres require huge amounts of energy and capital to drive business development strategies while keeping up with consumers' increased household consumption, Ms. Ramanayaka said at an investor conference yesterday. And Macquarie wants very much to take advantage of that. She said tech is going to impact every sector over the next while, but particularly data and clean energy. And that's where Macquarie wants to put its money.
Carbon capture and storage has a, quote, role to play in the energy transition, but the government has no plans to encourage its development with subsidies, according to Federal Energy Minister Chris Bowen.
Mr. Bowen told the Australian British Chamber of Commerce that the government believed it had no role to play in extending the life of the use of coal, but could play a role in hard-to-abate energy sectors. Now, carbon capture and storage was a favourite of former coalition governments, not so much this government. Mr. Bowen said the government's view on carbon capture and storage is pragmatic. Its approach is that it can and should play a role in hard-to-abate sectors, particularly where it's proven to work. But he also made it clear he didn't want companies to simply greenwash by talking about carbon capture and storage that didn't work.
Sean, the likelihood of Bonza flying again is diminishing, with a federal court hearing to set up a creditors meeting being told the lessors of 6 aircraft have clearly expressed their intention to remove the planes from Australia.
James Hutton, SC for administrators Hall Chadwick and Bonza Aviation, said 6 Boeing 737s are not part of the administration due to the fact that their leases were terminated the day before Hall Chadwick was appointed, according to a report in The Australian. The aircraft are not in the administrator's possession, and the lessors, AIP Capital, have clearly expressed their intention to take the aircraft out of Australia. Almost 58,000 customers, along with 323 staff and 120 trade creditors, are owed money by Bonza. Mr. Hutton said that for that reason, the Bonza administration was different to that of Virgin Australia in 2020 because that airline was able to continue trading and did not have a significant number of customer creditors. In this case, Bonza is not trading, has all those trade creditors, and the likelihood of it flying again is not high. Oh, bad use of the word high.
Yes, it certainly is, actually. Sean, in Victoria, the government has handed down its budget, including a $15.2 billion deficit, a jump in net debt, and forecasts for an expanding economy.
The financial bottom line isn't great, with net debt forecast to grow to $188 billion by 2028, but it did include help for households struggling with the cost of living crisis. There's $400 million in handouts for families, no new taxes or levies for the first time in several years, and few tough cuts to programs. However, there are delays in some projects. There's no new money for the $10 billion Melbourne Airport rail link, and there's a slowdown in the rollout of 30 government-owned and operated early childcare centres, a delay in school upgrades, and in the rollout of 60 mental health facilities. There's also job cuts in the public sector.
One last one, Sean, before we get to international news. The bidding war for Nimoy cotton continues, with French-based Louis Dreyfus upping its offer to 67 cents a share, which is higher than rival Olam's 66 cents a share bid, just a little bit higher.
Yeah, now look, I don't want to trivialise this very important takeover stoush, but Michael, it's not often you get to use the word ginner. G-I-N-N-E-R, which is exactly what Nimoy Cotton is. A gin is a person, in this case a company I suppose, who operates a cotton gin. And the word can be traced back to a Chaucer poem from around 1400. Isn't that cool?
Anyway. It's actually kind of cool. I did not know that.
Yes, I digress. When I was researching this story, I found myself looking at these words that had disappeared. And this was one of the words that had more or less disappeared, but it's come back today.
Yeah, when you start kind of researching something and all of a sudden you spend like 20 minutes and you are suddenly about kind of 18 pages away from where you started. You're like, I really don't know where that time has gone.
And you've got a deadline and a fair and greed show to do, within the hour. Yeah, anyway.
But you've got a fascinating little stat about the word ginner.
That's right. I can talk about ginner. Back to the story. Singapore-based Olam offered 66 cents a share last week. It actually said it would be 70 cents a share if it reaches 90% acceptances. Only problem, Louis Dreyfus already owns 16.99% of Nimoy. So it's very hard for Olam to get to 90% without Louis Dreyfus's support, given they're bidding against each other. That ain't going to happen. So effectively, Olem has offered 66 cents a share. Yesterday, Louis Dreyfus came in at 67 cents a bid. Happiest people in all this, Michael, of course, are the other shareholders watching the bid price rise.
Yeah, just sitting back, just watching, go, keep going, keep going, keep
Go,
going.
fellas. Yeah.
Now, international news, Sean. Hamas has agreed to a ceasefire proposal for the Gaza Strip, but Israel's war cabinet unanimously rejected it as, quote, far from Israel's necessary demands, hitting hopes for an immediate pause in the fighting.
Israel vowed to continue its operation in Rafah to exert military pressure on Hamas, but also said it will send a delegation to meet with mediators. The Israeli Defense Forces have also announced fresh airstrikes against Hamas targets in the Rafah area in the south of the Gaza. That came just hours after Hamas had said it had accepted a Qatari and Egyptian ceasefire proposal. Questions on that were raised almost immediately, particularly around the details, with both US and Israeli officials saying they were studying the Hamas response, according to Bloomberg. Obviously, not a ceasefire, but steps in the right direction.
Chinese President Xi Jinping called on France to help fend off a new Cold War as the European Union increasingly aligns with US concerns over security risks and trade tensions.
Mr. Xi told French President Emmanuel Macron the two nations should uphold mutual benefits and jointly oppose decoupling and the disruption of supply chains, according to the Beijing news agency. Xi is in Paris on a state visit before heading to Serbia and Hungary in his first trip to the European bloc in 5 years. He's hoping to convince Europeans that Beijing offers an economic opportunity despite warnings from officials in Washington about the risks of dealing with China. The EU and China are at odds on a bunch of issues. The big one, of course, is Russia's war in Ukraine.
Finally, Sean mentioned this one at the top of the show. The judge overseeing Donald Trump's Manhattan hush money trial threatened to jail the former president if he continued to harass witnesses and jurors. You're just saying, is that a line that you never thought you would have to say? If the threatened to jail the former president if he continued to harass witnesses and jurors. Just unbelievable. After concluding that fines have failed to deter the defendant from repeatedly violating a court-imposed gag order.
Justice Juan Merchant issued the final warning as he found Trump in criminal contempt for the 10th time over comments made online and to the media. The presumptive Republican nominee has now been fined $10,000, $1,000 per violation, which is the maximum financial penalty allowed by New York state law. Justice Merchant said the court will have to consider a jail sanction, though it was the last thing he wanted to do. Defendants held in criminal contempt can be sent to jail for 30 days, according to the Financial Times. However, it does really raise some constitutional questions about imprisoning a presidential candidate. Don't think they've talked about that one before. What about the logistics, Michael? So you put Donald Trump in one cell, the Secret Service detail the one next to him? I don't know.
In another cell. Imagine the ones that draw the short straw and have to go to jail with him.
The funny thing, the thing about Donald Trump, which I still can't get my head around, is that these kind of tenets of democracy, like fair trials and not harassing people, he just totally ignores them. Yeah. And he won't go to jail. I mean, the judge couldn't put him in jail. But it's the fact that he just totally ignores these really central tenets of democracy is quite extraordinary.
Yeah, it is. It really is. All right, Sean, up next is the Fear and Greed Daily interview. Today, we have mentioned before, you are speaking with Lucy Ellis, Westpac Chief Economist.
And until late last year, the chief economist really at the Reserve Bank of Australia. So she has great insights into yesterday's decision and what it's like working inside the central bank. Of course, Michael, if you don't want to listen to Lucy next, you can go straight to How Do They Afford That with you and Kenny Campbell. Either one would be great. In fact, you should do both, I think.
Well, I would want everyone to go and listen first to Lucy Ellis and then to me and Canna doing How Do They Afford That, which is, of course, our weekly podcast all about making your money work a little bit harder for you. It comes out every Wednesday. And then while you're on kind of working through all the to-do list, head to fearandgreed.com.au and sign up for today's newsletter.
Yeah.
Including your hard-hitting comments on share buybacks, Sean.
Yeah. That's right. Well, I mean, it's pretty much your morning satisfied, isn't it? Well, the next hour of your morning anyway.
Yeah, skip work and just stick with us, Fear and Greed. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 8th of May, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.